more about that in a bit, but a lot of the new age companies also doing well. So you have Nykaa, PB Fintech, all up between 4 to 5%. You have a new listing, by the way, that's Cello. We'll talk to the management in a bit, but it listed at a near 30% kind of premium, so holding up very well there. On the downside, you have Gati, Bank of Baroda, which are reacting quite sharply to their numbers. So those are definitely looking a little bit weak. And Nifty IT has come off a little bit from the top. And we have been seeing this for a couple of days, right, where we start all right in the IT, but it does see a little bit of a pullback. So that's what's happening in terms of the market action. We're going to talk more about this. But first up, let's start by talking about the new kid on the block, that's Cello. Like I was pointing out, it was a good listing for the company today, around 25% premium. And the stock listed at 829 rupees a share. The issue price was at 648 per share. So to discuss the company's plans post-listing, the outlook for the business and lots more, we're joined by Pradeep Rathod, Chairman and Managing Director at Cello World, to take some questions. Mr. Rathod, thanks a lot for joining us today. This is Pavitra. Of course, when we spoke to you earlier, we have discussed a lot about, your plans going forward, but now we would like to put some numbers to that. I think you earlier indicated that your overall full-year growth could be at around 24%, around a 30% kind of CAGR level. So do you think from the 1,800 crores that we saw in FY23, we could go to around 23? Is that a fair assumption? 2,300 crores for FY24?
No, so we have grown historically at around 30%, and because of the new adjacent glassware also which is coming, so next 3 years CAGR, I said it will be the growth which will be in the level of what we've grown in the past 3-4 years. So the numbers would definitely, some of them would depend upon the raw material pricing also, because from last 3 quarters we are seeing the raw material in our, which is a major raw material, has slipped down by around 30%. So there is some price correction, so the volume growth is very high. And thus the margin also in the first 2 quarters, gross margins have also gone up.
So what would be a fair estimate in terms of the full year revenue growth that we can expect on the back of all of this, on the back of raw material prices collecting, you seeing sharper volumes as well?
It would be a post of 20%.
Okay, so looking at 20% growth going ahead. Mr. Rathod, good morning. Thanks for joining in and congratulations on starting out life as a public listed company now.
Thank you.
So we hope to keep talking to you more frequently in the future.
Yeah.
I just want to come back to some brass tacks questions. This issue was all about promoters selling their stake, a part of their stake in the open market. It was, I think, an entire OFS. The company didn't raise any money. You do have some capex plans going forward. So just tell us, how much is the capex that you have planned for the rest of this year, FY24, going into FY25? And how do you intend to fund it? What is the cash balance on the books? And just, how do you look at the funding requirement within the company?
Right. So I think so historically, if you've seen, we've never borrowed any money for a long term. Maybe for 2 to 1 quarter, we might have taken a small loan from within the directors. But mostly, our bottom line, which is very comfortable for our growth, even for expansion, like we have another 150 crores of capex to be done in the next half of this year. And after that, for next year, we do not have major capex. So every 2 years, whenever we expand our glassware business, which is a capex-oriented business, otherwise all our other consumer wares and even writing instruments have a turnover to capex around 8 times. So we are not a very high capex in all the other verticals except the glassware. So I think so with the company's profitability, we would be easily able to maintain our growth and capex for the next 3 to 5 years without getting in for any loan.
Got it. Okay, so just glassware, since you mentioned that is the capex heavy part of the business, and you have a new plant coming on stream in Rajasthan as well. So tell us a little more. How much does that add to your glass business volumes and revenue? By when does it fully come on stream, and then how will it contribute to the revenue pie?
Yeah, so it would be on by March or April of 24, and it would be a 20,000 tons glass furnace, which could generate over the time around 275 to 300 crores of the turnover, which will be there for the company.
Okay, but that will come on your top line only in FY25, right? The revenues from the glassware segment.
Yeah, right.
Okay, 275 to 300 crores is the peak revenue potential of your glass facility, which is coming up in Rajasthan. What about steady state margins for you? You've been hovering around 25% plus or minus, 1 or 2 percentage points. Is this the trajectory we should expect going forward? And what could be the operating levers for you, margin expansion levers for you?
So yes, going forward, we are looking at this and we are sure that we will be able to maintain or scale it up by 0.5% to 1% over the next 3 years. And our main thing is adjacent the glassware business, which is started. All our other adjacent field, we are actually at a very good expansion mode. We have capacities to grow in all our other consumer wear also, in writing instruments and stationery. We do have capacity now built up to grow from here at a good speed. Molded furniture, of course, it depends, the revenue depends more on the raw material pricing, but there too we will grow at a healthy level across over and above the industry level growth. So all the three categories, but two of them would grow much faster than the molded furniture.
So you said 50 to 100 basis points margin expansion from the current levels. Is that on an annual basis? Yeah. Every year you will be able to improve your margins?
I think so. Over the next 3 years, I'm very sure. Because there are some parameters which, but white will expand also. There is a reason, and it will come as we go forward.
What about your online sales? It's currently 8% of your revenues. Any plans to increase your revenues from e-commerce?
Yeah, definitely it will go up. And if you see, two of our categories are actually, this is at a consolidated level of sales. Two of the categories do not sell online because of the volume, and one because of the price point. So if you see the main consumer business, we are around 12%. We would like to achieve a 15% over next 1 or 2 years. And that's what the projections we have done also.
Okay, sir, just one final question before we let you go. In FY23, your margins were 23.4%. I think 2 years before that, we have seen around 26.5%. When do you see yourself getting to that level? If you could just get the margin figures again.
No, so last year, there were some one-time expenditures which were there. So that's why it is a little lower. And in FY21 and 22, if the EBITDA or the EBIT levels were higher, that was because of there were many expenditures which were not there, like travel expenditure and all. So that was one particular year where it went up to 27%. So that is not a year because the volumes were too less. And so the real level is around 24% to 25% is what we expect.
Okay, got that. 24 to 25% is going to be the margin band. Thank you for joining in, Mr. Rathod. Good luck with your plans going ahead. That is Cello World listed on the bourses today. We'll take a break on that note. On the other side, we will discuss